Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome back to the Treasury Update podcast, Becoming a Treasurer series, talking about the languages of finance. I'll be your host for today's show, Jason Campbell, Business Development Leader here at Strategic Treasurer. And chatting with me today is Craig Jeffery, Managing Partner at Strategic Treasurer. Craig, glad to have you on today.
I'm glad to be here in our soundproof room. It's not a soundproof room, but our studio. It's really cool. We should show people what this room looks like. It's more fun than doing work.
We should. I think the last time we actually talked, I think you mentioned something about doing like a video, like a live stream. So maybe that's somewhere down the line, whether it's through the Treasury Update podcast or the coffee break session, something of that nature. It'd be really fun to do. Yeah,
we did a live stream this week on a 15-minute topic. Did it with Push. So you can see that on YouTube on our CTM file channel, I think. Yeah.
Yeah, I watched it. I thought it was great. I think it was good to see you both and to kind of listening to the topics there. It was really good. I think that again in the future, right, is having that mix between the video and the audio and just being able to be accessible everywhere, right?
Yeah, that would be great. Do you have any questions today? What are we covering today?
You got it. Well, today's topic today, we're going to talk a little bit into a little bit further along in the series that we've done, talking about the languages of finance. And I know that previously we talked about FP&A and we've talked about the controllers. And I thought we had some really good dialogue, really good conversation. And hopefully there were some really good takeaways for our listeners learning, a little bit more about those positions. And now moving it forward into the series, talking a little bit about the accounts payable. But before we get into that, let's kind of revisit a little bit about this series here. And if you could go in to talk about, just kind of giving our listeners, just explaining what the purpose of the language of the finance subseries really is.
Yeah, the whole focus of this is different areas of finance and different areas of a company can use some of the same words and mean different things. And there's also a different set of priorities, and it can seem like priorities should be the same in every area of finance, but they may be different. Understanding the differences in the words that are used and in some of the priorities can really help each person understand what's going on and communicate more effectively. So that's really what it is. Good communication means understanding different terms and different the basis for how people are communicating. That's really the focus.
Yeah, and I think that's great. And I think just, for our listeners, just really kind of chiming in and understanding each of these core functions. And again, like you said, that, communicating out those key pieces, those niches of each of these I think is really important as, people think about, their next stepping stones. Now, in the past, like we talked about, we covered the FP&A and we talked about controllers. And we want to move into this episode more into, again, accounts payable. Again, I can't say enough how excited I am about this episode, but it really is kind of, I think it's more because I understand it a little bit more than the other two that we talked about. And I'm really anxious to get your point of views in hearing what you have for our listeners. So let's kick it off with, how is this language of accounts payable different from Treasury?
The words that AP uses and the words that Treasury use, and even procurement, if you think of procurement all the way to payment, and you think of Treasury, they use quite a few of the same words, but oftentimes it's different. We're talking about the cash conversion cycle. Someone's making a payment. Treasury cares about payments. They care about the flow of cash. AP has some different areas of focus. So it's not so much that there are words that mean completely different things. It's more about priorities on these. We think about, what is AP trying to do? They want to avoid fraud. They don't want to have business email compromise where someone has shifted pay information to some other location. So they're concerned about that. They're also really measured heavily on efficiency, the efficiency of their process, right? It's an overhead part of the company. A lot of people come up with these ideas that, AP or AR can be, revenue generators. Well, in many senses, all of these administrative areas, including Treasury, are a cost to the organization. And yes, they can be more efficient and generate better returns. But they're pressured. AP and AR in particular are pressured on the efficiency front. This drives a lot of the behavior. And so interruptions from people they're paying, the vendors that they're paying, because payments are late, they've short paid or other issues, can create a significant problem for them because they're taking all these inbound calls and emails. And as much as they try to block that noise and distraction from happening, it occurs because they'll come and go to other areas of the company and they'll follow up with AP. So they're trying to avoid quite a bit of that. So being efficient, making payments, not paying early because they'll get in trouble for that. That can be a challenge. Now, I'll give you an example about an end of month view for AP would differ from Treasury. So Treasury cares about when payments are made the whole month. They need to know what their cash flows are. They want a good forecast. They don't want anybody to pay early. They need to provide for the liquidity on every given day, not just at the end of the month. And so sometimes you have groups that hold payments up to the end of the month and roll them over, particularly at quarter end. There's a lot of these delays, or they're trying to get things cleaned out. Others are trying to get things cleaned out before the end of the month, so they avoid those calls. There'll be a huge level of disbursements right before the end of the month, just to avoid some of those calls. And Treasury is more concerned not about the month-end reporting, what the outstanding is at the end of the month, or whether it's lower or higher, but really one focused on the availability of capital.
So is it also fair to say too, in the world of folks that are in accounts payable, it's almost like you always have to be a steward of protecting the integrity of the organization in multiple ways from a cash flow perspective, because the integrity of the reporting, right? It's important to ensure that, the payables are captured within the correct financial time frame, right? But I was also thinking the integrity, but also to the reputation of an organization, right? Especially from a vendor perspective, because you have vendors that are ambassadors to your brand that you're contract with. And it's important to ensure that your vendors, you adhere to the contractual obligations. So really that's an important piece as well into that position, right?
It certainly has a significant factor, and there's terms and agreements, but payments don't follow the terms all that often. To a significant extent, they do. When we went into the COVID crisis, the pandemic, it was around 40% of firms delayed payments. Specifically identified that they were delaying payments to provide a cushion, and the biggest concern for companies was delays in their receivables, right? So the opposite side was the situation. When we moved through that changed. So it's a key area, and there's legal concerns, making promises to pay. So if you're an AP, you can be put in a crunch, and it could be brought about by Treasury saying we need to conserve capital, so extend payables without officially extending payables, push things back, push things over the end of a quarter, push things over the end of the month, or extend them out another 5 or 10 days. They get calls. They'll get calls and follow up. It's like, when are you going to pay us? This payment's past due. Is there a dispute or is it an issue? No. And, if you make a promise to pay, that's a different type of legal situation if you make a promise to pay for a certain period of time. And so people either offer their scheduling to pay. We're going to schedule that to pay later. Well, it's later, but now it's coming in 14 days. People tend to provide a little bit of relief. Well, let's say they don't even want to do that. Sometimes they're like, okay, we're planning to schedule that next Friday. We'll schedule when it's going to go out next Friday. So it's not even it's not even a full commitment to schedule it. Here's when we're planning to schedule when it goes out. So it's more of an open-ended item. I say that's a defensive mechanism that AP has to kind of step through to avoid the legal issues, particularly if they're being, pressured by other areas of the company. But all that's to say is AP does a vital job. It's really, really important for an organization, like you said, for the quality and care of the organization, protecting the flow. But it's one of those jobs that, for the most part, is one of those thankless jobs. And I'll give you a story that shows, that kind of makes that point. In consulting, we walk around different organizations and talk to people. When you're walking around, you always have that chatter that goes on. The questions, everything from the weather to that's a pretty sign, just the conversation you use because you don't want dead air. And there was a party going on. Oh, what's that party for? Is it someone's birthday? It's a pizza party that a vendor provides AP if they get all their invoices paid before the end of the month. And that is fantastic collection activity, right? It's like, who is not appreciated AP. Nobody appreciates AP, but they're being appreciated. They're getting a pizza party. Who gives them pizza parties? Well, a vendor's giving a pizza party. Who is going to get paid on time every month? Someone's spending $100. All of their invoices are getting paid. I mean, I'm sure this was a pretty significant spend. But part of that point is we have to, in organizations, make sure AP, AR, Treasury, controllers, audit, they're all appreciated properly. And I don't mean pizza parties, but the idea of what's driving them, what are they trying to do, and how does that fit into the organization's process? Sometimes that's not really considered. And so, hey, we have to pay them anyway. If we get all these done by the end of the month, we're going to get a pizza party. That is pretty nice. We're doing that. We're not hiding it. We're doing it. And so I think that's part of the language, the mindset, and some of the perspectives.
Well, I mean, like, pizza is delicious. So it's to be honest with you, I don't know if I ever told you this, but pizza is actually my favorite food of all time. I could eat it all the time.
I don't think
if you want to show some appreciation at some point, I just want to throw that out there in case you ever wanted to know what is Jason really into. Jason's really into pizza. Yeah, absolutely. Love it. So I know, just going a little bit back to the question about the differentiation between accounts payable from Treasury, but what are the problems with misunderstanding each other?
Competing KPIs is something we've talked about on this podcast a lot. Different standards and goals. That can be one of them. What are your key performance indicators? But even more broadly, as opposed to just key performance indicators, what people are measured on, what are people driving towards? If we think of Treasury, one of their roles is the superintendent of payments. They superintend payments. They don't do every function with payments. AP has a huge role in payments. They're the manager of accounts payable, right? They manage that activity. They have a specific set of roles and guidelines that they do. And Treasury, as superintendent of payments, has to make sure that all of those functions are occurring properly. They're well secured. They're supporting the relationships of the organization, and so forth, and in compliance with different rules, sanctions, what have you. So those two roles, superintendent of payments versus manager of AP, are different. Treasurer cares about relationships, the bank relationships, how those support capital, access to capital over time, and controls. Accounts payable, what are they really focused on heavily? They're focused on making sure their payments are authorized, valid, and efficient. So that the efficiency play is really significant there. All of those things that I said, relationships, control, capital, authorized, efficiency, everyone in an organization should care about that. When you take a step back, everyone should care about that. But the focus of the different groups tell a story, and that can determine what behavior is done. And so misunderstanding each other can create all kinds of problems, like on the efficiency side, or trying to avoid pain. Another example, I was touring a company, and we're interviewing and doing an assessment. We're spending a little bit of time on the AP side, and we're talking to a clerk. He goes through, makes some changes in the system. He's processing payments for his AP run. We're observing it to note. And why we do that is because every single procedure in every single company that says this is how things are is a work of fiction. It may have been true at one point, but it's become a fiction. It passed into mythology. They don't do what it says. What did he do? He went and changed the terms. Like, it was, instead of due 30 days, he would change the terms on the individual invoice to pay upon receipt. Why did he do this? 3 years ago, they were really late paying. They had called the vendor had called the CEO and said, "We're not getting paid. We're not going to ship stuff." CEO came down and said, "You got to get them paid. This is like our biggest supplier. You've got to get them paid." And so since that time, they didn't want any problems. So they're paying everybody like instantly, the hugest supplier. And the project they were working on was working on optimizing working capital. And so if you just looked in the system, you said, "Hey, here are the terms. What are the terms? Terms look good. How come DPO is less than what the terms are across the board? How do these amounts differ?" And this was actually an easy way to find it. We didn't have to do too much analysis because, a supplier that they were paying nearly 40% of their payables to was being paid basically on due upon receipt terms. And so that's an area where the efficiency, trying to avoid pain, creates a very different result for the treasurer. It was like, hey, pay on time is a good working capital movement, good working capital plan. The other goal, working capital, didn't matter too much to AP. They were concerned about efficiency and avoiding some pain. So those are some examples of problems with misunderstanding each other or misunderstanding the entire organization's approach to payments in this case.
Understood. And I think the important piece of it is ensuring that, again, from having alignment of goals. Like you said, it may be different in KPI perspective per department, right? But ultimately, like there's an alignment got to be in place, and everybody knows at that point. Having a smooth process of how funds are distributed, regardless of where they stand within the department there. So now we talked about them, with some problems and misunderstandings. So let's flip it a little bit here and just talk about, when do AP and Treasury groups need to work together?
I think the work stream for payments is a working capital management play as well as efficiency. That is absolutely something they have to coordinate. AP may have certain ideas of what they could do, but they almost always have to work with Treasury to get it through, because it's going to terminate in a banking relationship somewhere. It shouldn't be done with a third party in the last second. Treasury's informed. At the same time, when Treasury's making decisions, they need to make sure that AP is understanding, is providing the input on the process, on the flow. So addressing the efficiency concerns of AP and the working capital and capital needs of the organization. The other side has to do with payment security. Organizations are not well prepared and well protected on their payment workflows and payment processes. They're exposed. They're exposing financial data that's being exposed on the network, on desktops, across the board. I think Treasury is not only superintendent of payments, but superintendent of payment security needs to be working closely with all of the payment areas, including AP, which is a massively important group in this area. And so looking at that for efficiency and control is essential from a payment standpoint. And that's not just do it once and forget about it for 10 years, but maybe a clean assessment and then doing it again. There's other farther downstream systems like reconciliation, where Treasury, AP, and maybe an accounting group is involved. They need to work together on that. You don't want to design a process that's like, oh, this is very efficient on the outbound AP side, but you've broken reconciliation. So now the reconciliation group is screaming, they're downstream. It's like you threw trash in the river. You messed up, timing of items, individual postings versus detailed postings. You made it impossible to reconcile. Treasury and AP need to make sure they're working together with the other parties, in that case, reconciliation. And then finally, services and relationships. Bankers provide services. They research things. They provide advice on what works well. Treasury and AP need to work together to make sure that they're getting the right service level, the right functions for everything from control, efficiency across the board. You can make payments that are great, but if you have something that makes payments very efficient, but also allows the recipients to know when they're coming, have greater visibility to it, you create a better process, because now there's less defects, less people calling. When am I getting paid? It's like, oh, I see it. It's scheduled. It's coming in 4 days. It's in a portal. I know it. Or I can see it, and I can take it earlier if I want. I have flexibility. I have lever. So if we think about all of these things that are great for working capital or efficiency, if the groups get together and talk through what they're trying to accomplish, the decisions to be made will make sure it's considering each participant's view and key drivers that they have.
Yeah, I mean, it goes back to, as you mentioned, some of the, there's a lot of key functions in that accounts payable around, ensuring alignment, the goals, being that superintendent of payments, right? You want to keep your vendors on your good side. I mean, that could be catastrophic if the vendor all of a sudden says, you know what, we're going to change we want to change the terms of payment or in the relationship, right? That could put a company in a very chicken with their head cut off kind of moment, trying to figure and scramble what to do with those next steps. So it's important, vital to have some great folks running and working in that department, leading that department. And then also too, as well as being able to work together with Treasury and ensuring that, the relationship and the alignment is there. So,
well, that's a good example. I mean, a vendor may want to cut off activity because it becomes it's not worth anything to them. Or they may say, we're going to be pushing the prices up higher because you're killing us on when you're paying us in 45 days, 60 days. Now it's 60 to 90, or it's unknown when that's going to happen. And that's creating significant friction on our side. That's costing us more. I need to get that back by a higher rate. So there's quite a few more conversations we could have about, AP and procurement, sourcing.
I'm sure we absolutely could. I think I could I got a couple of stories, but we'll save the stories that I may be able to share down the road for another episode of the Treasury Update podcast. Well, thank you for joining me today, Craig. I really appreciate it. And thank you to our listeners for turning into this episode on becoming a treasurer. Until next time, take care.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.